Hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I'm joined today by Dan Darrow. Dan is a professional trader with T3 Trading Group and also a co-moderator in the Alpha Team VTF with T3 Live. Thanks so much for joining us today, Dan.
Thanks for having me. It's great to be back.
Yeah. So our first question, as always, is going to be the same. How would you grade your week of trading so far, and why?
Um, so I'd say it's about a solid B. Um, Mainly, and we were speaking a little bit earlier about this, but mainly for me, it was actually a bit of a quieter week up until this point.
Mm-hmm.
A little surprising because I thought it would be a bit more eventful with what was on the calendar earnings wise, but as I'm sure all of your guests have said over like the past few weeks. I mean, you trade what the market gives, and sometimes it's
Mm-hmm.
super busy, sometimes it's a little bit quieter. And for me, this week has been a little bit quieter, even though I had higher expectations coming into it. So um, there was some good trades, some less good trades, and I'd say overall about a solid B for me this week.
Okay, before we get into our discussion about earnings and options and why they're one of the
Mhm.
best things to use around earnings, let's talk about your best trade of the week so far and your worst trade of the week so far, and what made either of those good or bad.
Yeah, so actually, over this past weekend, there was a biotech conference that had a few names that I had been watching for data releases.
Mm-hmm.
So I actually played a couple of those bios. Just I mean, names people might not be super familiar with, but it actually ended up being some like good action. One of those like calendar events that I really like to focus on.
Mm-hmm.
So there were a couple names, ticker MRUS, the other one is RLAY. But just, a couple names that were data driven, totally unrelated to like overall market action, just, like news, the data comes out, stocks go up, stocks go down, just very specific to those names.
Mm-hmm.
As far as like worst trades, I mean, Netflix today ended up being a losing trade for me, and we'll get to that, I'm
Mm-hmm.
sure, in a little bit.
Mm-hmm.
I ended up playing that, and options, well, the stock went the wrong way, or it went down. My options lost some money. So I'd say as far as like worst trades, that'd probably the worst trade so far this week. I'm sure there might be a couple more. Looking at the price action on Tesla after hours, and that could be another one.
Yeah, we'll be talking about that one later as well.
Yeah.
For everyone who's joining us live, I just want to give you a reminder, this is a Q&A session, not just for me and Dan, but also for you and Dan. So please, in the live chat, submit your questions, and in the second half of this event, I'll ask Dan those questions for you to make sure we're talking about the things you want to learn about from Dan himself. Just a little background on Dan. He is an options-focused trader, so he is an options specialist within the Alpha Team VTF, but he also has, as he mentioned, a lot of focus on biotech, and he's kind of an expert in that field as well. So if you have any interest in learning about options or bios and how Dan plays them, please submit those questions and I will ask him them for you. He can't see them, but I can. Okay, so my first trading focus question, I guess, is the big news of the week this week, as you mentioned, is earnings. And for many traders, including yourself, options are considered a good tool to use for news events like earnings. So explain why this strategy is so beneficial for binary events like this.
Yeah. So, one of the things I feel like, and we've spoken about this for a long time in the VTF, and what I really
Mm-hmm.
try to like express to traders is that earnings, there's always going to be a degree of risk. I mean that nobody knows for certain what a stock is going to do. I mean, let alone something where the earnings, there's a lot of different variables that play into it. So um, some people just don't like playing earnings because of like that unknown risk. But when it comes to options, like the great thing about having the ability to like define your risk in the sense that you can always know at any given time exactly what your max potential loss would be, right? So if you're
Mm-hmm.
trading like debit based contracts, meaning if you're long calls, long spreads, long puts, etc., not selling premium. If you're long premium, then you'll know that at any given point this is my max loss. So when it comes to these events, you have like maybe like an educated opinion, or you have conviction that it's going to do something. Okay,
Hmm.
options, you can risk X amount of money, and at the end of the day it doesn't work, then your max potential loss is going to be X amount of money, say, versus like if you were to buy stock or short stock into earnings, trade doesn't work. I mean, you don't technically know what you're going to lose. So
Hmm.
that whole element of defined risk is just, to me, it always like has been well suited to trading events. I mean, just being able to control the amount of money you put into a trade, can know at any given point, this is my max potential loss. I mean, sometimes your potential gain could be undefined as well if it starts to work, but in other situations you kind of like cap it. But I always felt that options are particularly suited to this type of trading. You still need to like really analyze setups and kind of have like a bit of like a info on the like the background of the company, because you don't want to just like throw random money at all sorts of kind of like coin flip trades. But if you have good setup, informed opinion, and you can define your risk, then to me it seems like really interesting scenarios for a trade opportunity.
Great. All right, so now let's talk about specific earnings that we've gotten in so far. We've gotten results from all the big banks at this point, and for them, things are looking, pretty good.
Mhm.
Record revenue at J.P. Morgan Chase, a beat from most of the big banks on profits. Some, saw a little bit of a miss on revenue. There was some extra focus on these results coming into this week after the regional banking crisis that we saw in early March. What do you think these earnings from the big banks show about the banking system overall?
Well, I mean, admittedly, I had the big banks haven't been as big of a focus for me to trade earnings wise, but I mean, I know how important they've been to the action in general
Mm-hmm.
over like the last few sessions, and especially for a lot of people's focus just since March. So having like read about it, it seemed like people just wanted a sense of stability, right?
Mm-hmm.
I mean, I think people in the aftermath of the banking crisis in March, a lot of people assumed that the big banks were going to be the beneficiaries, because money was going to like come out of like the more at-risk regionals, go into like the bigger, safer banks.
Mm-hmm.
And I think to a certain degree, that's what like earnings like over the last few sessions have really confirmed, is that the big banks seem to have really come out of this a bit ahead. We've seen like a lot of like those deposit flows, and that's good. And I think the commentary out of like the CEOs has been really positive as well, saying
Yeah.
I think today I was just reading, I believe like the Morgan Stanley CEO said like there is no credit crisis, there is no credit
Right.
crunch. So
Mm-hmm.
like having like this really positive commentary, plus putting up numbers that kind of give people confidence that, okay, maybe it was like just like a few bad apples,
Mm-hmm.
maybe we can get past this, right? So I think overall, even though like the action on some of those big banks maybe wasn't particularly, it wasn't like a huge gangbusters moves, although JP Morgan did. I just think it was
Mm-hmm.
encouraging, positive commentary, and really that's what people are looking for, and hoping for, honestly.
Yeah. So the other big earning stories this week were Netflix after the close on Tuesday, which you mentioned earlier, that came in
Mhm.
mixed, and then
Yeah.
Tesla after the close today, a miss on revenue there for Tesla as well. Let's start off with Netflix. Give me your reaction to those results and how you approach those earnings as an options trader.
Yeah. So I don't, if you want to pull up the chart too while we go through it, they
Yep.
can see. Um, So Netflix Netflix was very lackluster, and I think there was enough in the report for like both sides to kind of make like an argument, right? There was a little for bulls to hang their hat on, a little for bears to hang their hat on, but I mean I think at the end of the day it was very lackluster. The quarter itself just mixed, and I think what people were looking for was some sort of like sign that maybe they can get growth going again, or seeing like some sort of improvement in like the ad tier rollout. So for growth, really no sign of that yet, but like there is some improvement in the ad tier rollout. Also, it seemed like cash flow was a bit of an improvement, and they talked about the password sharing crackdown um, in the months ahead or the quarters ahead. So I feel like the quarter itself just it wasn't very inspiring, and that's part of the reason why like the stock slipped today. And I think also though, like the commentary about kind of reiterating guidance for the year and making progress towards the back end of the year, it's going to keep like the stock probably in play, although it just wasn't enough to really drive material upside. And if you look at the chart here, you can see going back to the middle of last year, like July of last year, it's still kind of in this like long uptrend. And I mean, this is the type of quarter where I feel like it just keeps the trend intact. It wasn't enough to really drive it materially higher. It also wasn't bad enough to really set up like a material breakdown. So I feel like it's one of those quarters where it's just, it was okay, nothing special. The trend remains intact, and I would probably look to approach the stock, from that perspective moving forward until something else changes. For me, going in, I was thinking, okay, coming off like a pretty solid quarter in January, if they did manage to surprise and turn in something positive, that it could move through like the top of the recent resistance, but it just didn't materialize. I mean, that's what we were talking about before. It's defined risk. I was looking for a potential breakout and a move back up towards that February level. It didn't happen. So at the end of the day, like the money I lose is what I was planning on. Or I mean, I didn't want to lose the money, but my risk was premium paid, and now at least I have a bit of like a game plan of how I want to approach it moving forward, which is wait to see if it gets back to the uptrend support, and then maybe look at something a few weeks out, a couple months out, something like longer term.
Okay. A reminder for everyone who's joining us live to submit your questions in the comments. We will get to those in the second half of this event, whether it be you want more about something Dan's talking about with me, you have a totally unrelated question to our conversation here, anything and everything, at least, related to trading, Dan will talk to you about during this event. So I have the same question for Tesla, Dan, your reaction and how you approached that release throughout today's session. But it is important, I think, to note the automaker did cut prices for the sixth time this year earlier today before reporting earnings. And we did get a sales miss when they reported Q1 sales ahead of these earnings. So,
Yeah. So why
or
don't we pull up
deliveries
the
rather.
chart? Let's pull up the chart of that as well,
Yep,
so we can
charts
walk
up.
through that too.
Mhm.
Okay, so I actually so Tesla for me is actually a position that I initiated last week. So part of my thinking, it's funny actually. When we last spoke about a month ago, it was we went through Tesla, and it was the lead up to the delivery number, and now it was just so happens that today was the earnings date. But what interested me about Tesla last week is that it showed a little bit of weakness ahead of this week, and I figured with like a stock like Tesla that historically gets a lot of interest around these major events, that the stock approaching like the bottom of this little uptrend that had formed, it seemed like an interesting spot to go long. Either play for a bounce this week or play for some of that enthusiasm to kick in and see option prices pick up. So the position I entered were call spreads. And I got into them last week looking for a possible move and retest of the late March high. This week it just it just hasn't really done much, and then today, when like you said, when they announced the further round of price cuts, it just really deflated the stock. So what I decided to do was just sell further out of the money premium, just kind of like cut back my risk. I didn't want to add more options because I thought the setup was changing a little bit after all these like another round of price cuts. I also didn't think that the stock was going to have like a ton of downside, which we'll see if I end up being right about that, because I'm noticing that it's trading lower in the after hours right now post earnings. But for me, coming into or going into tomorrow, like it's really going to just be like, okay, the numbers were a bit disappointing. It looks like they missed on margins. I was just reading about it before we hopped on the call here. So they missed on the margins. We'll see what the stock does on the earnings conference call and see where it opens tomorrow. But I mean, for Tesla, it's just can it hold this upper range, right? So it, you know, it had a really nice move in January, a big reversal, a really strong run at the beginning of February, and now that it's come back from this really nasty sell off at the end of 2022, it's just like, okay, yeah, this quarter may not have been great. There was a little bit, you know, a little bit of like weakness in certain pockets, which, you know, people may have been expecting when they keep announcing the price cuts. And then, you know, for this stock, it's all driven about, it's driven by like sentiment and momentum. So it really
Mm-hmm.
just needs to like hold these higher levels and not start to like, you know, lose like the 170s, low 160s, because that's really going to probably turn people away from it. So I mean, I don't know if there's going to be a really fantastic setup on it tomorrow, but I do think like if it can hold around 170, hold above some of the moving average support, that it could really keep it at, you know, in play for the foreseeable future.
All right. I'm seeing those questions roll in from everyone, so please keep submitting those. I promise we will get to every single question. I will ask Dan all of them. I will not skip one. So anything you want to know from him, continue to submit those questions in the chat. So as you and I were talking about ahead of this event, Dan, earnings will kind of pick up steam next week. Next week is kind of the first big week of this Q1 earnings season. We have big tech names on the calendar: Microsoft, Alphabet, Meta, Amazon. They're all reporting, plus some other key players as well. Talk about your expectations for next week and then this earnings season also as a whole.
Okay, so let's start with the chart of the Qs here,
Okay.
and then we'll go to just a couple individual names.
Yep.
So what I think is kind of interesting, as it sets up currently, and we'll see how the week finishes, is that we've been in a very tight consolidation on the Qs, for about like the past two weeks at this point. Now, I would say, you know, ordinarily like a consolidation like this, once we get a breakout, you know, should have like a decent sized move, right? So after a consolidation, you look for an expansion of the range. I think what's even more interesting about it at this point is that, you know, as the calendar lines up next week, as you said, is probably the biggest week of earnings season,
Mm-hmm.
um, for this quarter. I mean, you have Microsoft, Meta, Amazon, and Google all reporting next week, which are all substantial weights in the Qs.
Mm-hmm.
So we have, you know, if we do end up staying range bound into next week, we're going to have the Qs going into, you know, the last week of April, the biggest week of earnings, and a week where you're going to see, you know, four of the five largest weights in the index report. It just seems like a fantastic setup for either like a breakout or a breakdown. I mean, just like a range
Mm-hmm.
resolution. So I mean, I think, you know, in addition to the names you mentioned, which we'll talk about in a second, I think the Qs themselves are actually an interesting setup, just because, I mean, like the consolidation has, you know, gotten to a point where, I mean, we're going to have major catalysts pretty much every single day next week, and any of those on their own could deliver a break of this. So I
Right.
think, you know, and I mean, the pricing will change, but I was looking at the cost of the straddle for next Friday expiration, which is April 28th, and it was
Mm-hmm.
pricing in about 775. And, you know, to me, like, you know, that could end up being something where, you know, it's a little bit underpriced, especially if we do manage to break the range, because we should see a pretty sizable move once we, you know, either go up or go down.
Mm-hmm. Do you want to talk through some of those
Yeah,
specific charts
exactly.
we have
Yeah.
for those
So
earnings coming up?
yeah, so let's pull up Microsoft first.
Okay.
So, kind of an interesting name, and I know there's going to be a lot of focus on it, just because it's been a
Mm-hmm.
top performing stock for the last, well, basically all year. But I mean, just since the middle of March, it's really had just such a powerful move. Um, Now, if you look back over the last year, it's actually bumping up into a pretty big resistance range in the low 290s. Um, so I think like a name like Microsoft, which has had like a really strong run. I mean, I think this is going to have to be like a clean print, where, you
Mm-hmm.
know, they think the expectations have gotten higher as the stock has run. Analysts have raised their targets, right, to keep up with the move. So a stock that's bumping up into, I mean, literally like resistance for a year. I mean, I think it's going to have to be like a strong, clean print, and actually that wasn't the case last quarter. I mean, it was a bit more mixed.
Mm-hmm.
So I mean, I think Microsoft has a great recent run, but I also think that, you know, for next week to really get like another powerful move higher, it's going to have to be like a very solid report, because, you know, it has had a large move and a big area of resistance, and it does seem like one where if it's not perfect, there could be a bit of retracement. Versus, so Amazon, if we want to
Mm-hmm.
pull that up,
Yep, charts up.
Amazon's a little bit different to me. So Amazon has obviously lagged. It's been one of the names that I mean it's up off the recent low, but it's still really not participating to the same extent as some of the other mega caps. But
Uh-huh.
to me, it's kind of like an interesting scenario for that reason. It's where you know where Meta or Microsoft or even Apple, analysts have been kind of like chasing the movement and keep raising their targets and maybe raising the bar a bit. Amazon has been a little bit different in that it hasn't had like the same love. The stock hasn't been moving as much. So to me, it seems like the bar could be a bit lower. And when you couple that with the fact that the stock is actually at kind of like an interesting technical spot, you can see it's like pushing up into several month resistance after rising support throughout 2023. It seems like it could be kind of like an interesting setup, especially if the numbers are decent. And then if you look back even further, the yellow line that I have on those charts there is the 200-day, and that's been like a long-term level of resistance, and it's sitting
Mm-hmm.
just very, very close above. So to me, Amazon's I mean, of like the four mega caps reporting next week, Amazon's probably the most interesting setup to me. And we can check updated pricing once we get into next week to see what the options are expecting. But it does seem like one of those scenarios where the options could be mispriced a bit, especially if surprisingly good or surprisingly bad report.
Yeah. So you've mentioned options pricing a couple times here, and even for
Mhm.
equity traders who may not trade options, the options market is used as a barometer of implied moves for a stock before and
Mhm.
after a news event like earnings. So talk about how the options market gives equity traders insight into what a stock might do.
Yeah. That, like you said, I mean, not everybody trades options, but it is useful
Hmm.
know what options are expecting, because it does give you an idea of what the implied move is. So
Hmm.
you'll hear often that people will say, they'll reference like the implied move for a stock for
Hmm.
earnings, or for a week, or for if we have like a CPI, they'll say the implied move for the SPY is such and such. And basically what they're saying is like the option market is anticipating a move of such and such percentage or such and such like points, and that most people just trade like most people just take the shortest dated at the money call and at the money put added together, and that's the expected move. And
Hmm.
what's nice about that is that it just gives you an idea of the expected volatility. So
Hmm.
for like a name going into earnings, maybe it's something you were, so like say for instance, it's you don't trade options, but you're sitting in like a stock that is going to have earnings like tomorrow or the day after, right? And you're just wondering like, okay, what's the expected risk on this? Like,
Hmm.
is the stock, are people expecting like a 5% move, or are people expecting a 15% move? So
Right.
the option market, even if you don't actively trade options, it's nice as like a reference, because it gives you an idea of what the expected move, from a large portion of people is, not just like what you think it's going to say, or what you think it's going to do. This is like what the overall market is anticipating. So
Yeah.
just gives you an idea of that type of movement.
Cool. Okay, so I'm still seeing those questions come in from everyone. Continue to submit them. I have a couple questions left here, and then we'll get into those audience questions. So Dan can be talking about what you guys want to learn about as well. So continue to submit those questions. If you hear anything he says you want to know more about, or you have something totally unrelated, related to T3 Trading Group or options trading in general, etc. Okay, Dan, so looming over everyone's head is the next Fed meeting. We're 2 weeks away as of today from the May 3rd rate decision. And the Fed futures market is showing, the large majority of traders betting on a 25 basis point hike. So, what are you focused on as we head into that meeting over the next 2 weeks?
Yeah, so it's interesting. The Fed funds futures have been, it's been very dynamic over the last
Yeah,
several weeks,
sure.
and I'm sure even like through next week it could be changing too. So before we began speaking this afternoon, I checked, and right now the May the May Fed funds futures are saying there's about an 83% chance of a 25 basis point hike.
Mm-hmm.
So that's been like quietly or slowly shifting higher.
Mm-hmm.
I think what'll be interesting is just as we get into the beginning of May and the Fed meeting, is just like what the Fed governors say, and then right after that we're going to have some data. So we're going to have the jobs report, and then we're going
Yeah.
to have the CPI on the 10th of May. I mean that's
Mm-hmm.
probably really going to impact expectations for the middle of the year, because yeah, I mean, it just we've had at different points just like, I mean, people were expecting I think at one point people were expecting a two rate cuts this year.
Yeah.
I think at one point in March, like the December Fed funds futures were pricing in a full percentage point, which would be
Mm-hmm.
four
Four.
cuts. Yeah, so those have kept moving higher, and now, right? I mean, as it stands, there's only one cut priced in December, but that to me is what's most interesting as we get to the Fed, is that, like, in the aftermath of the March banking crisis. I mean, some people were expecting a rate cut coming in the middle of the summer in July,
Yeah.
but now that keeps getting pushed back. December went from 4 to 2 and now to 1. So if people keep getting like the feel that the Fed is going to have to keep rates higher for longer, if we're really moving past the bank crisis, how does that weigh on sentiment in tech? Because tech has really benefited from this idea that the Fed is close to pausing, or even like
Mm-hmm.
pulling off the gas. So if the Fed reiterates that we still have more work to do, and then in the beginning of May, right after, we have some economic data that maybe is still a bit hot, right? Like, what does that do for Fed funds futures? And like, alternatively, how does that impact tech, which has had such a phenomenal run over like the last
Yeah.
few weeks? So there's a lot of moving pieces. I mean, I think the Fed meeting is going to be interesting, both for what they do and also like their commentary. And I think like the following week right after it is going to be just as interesting, just for like those big economic data points.
Speaking of economic data points, the UK this morning released, or overnight, really, but really early this morning for the US, released their inflation data, and that came in hotter than expected. And so that prompted concerns about, sticky inflation not going
Mm,
down globally, which then, of course, does impact the US as well. And that, caused a pop in treasury yields, which drove futures down for the US stock market.
yeah.
How I think some traders might forget that what happens in the rest of the world still also impacts what happens here in the US. So even as we're getting our inflation pressures down in the US, still hot but down,
Mm.
how much does the global picture start to also impact how people are feeling about whether we're in a lower but sticky inflation picture versus a continually lower to the 2% goal?
Yeah, it's funny because you like you said, you don't hear about it. I mean, right
Mm-hmm.
now I feel like everybody has blinders on with just like the US situation, right?
Mm-hmm.
I mean, the US just, it's like so focused on just getting the US inflation down. But
Mm-hmm.
I mean, it really is, it's not just the US. I mean,
Mm-hmm.
it's many other countries are experiencing like the same issues. So I think that's part of the reason why people think like inflation is just so sticky, or may end up being so sticky, is because
Mm-hmm.
there's a lot of moving pieces to it. And even though, like, certain areas you might see it start to pull back, there's still a lot of areas that aren't pulling back. And I mean, if you have like other countries which are having like similar issues, I mean, it creates like this like global, like almost like higher bar of inflation, and it's tough to unwind that. And I mean, myself included, I mean, I feel like we just are so focused on what's going on in the US that we don't pay attention to what's going on in the rest of the world. But
Mm-hmm.
if inflation does start to moderate a bit in the US, then like you said, I mean, like, there's still other things that we need to be concerned about that are going to make it tricky to really see rates start to like come down quick, or at least as quick as some people are expecting.
Yeah. In an interview over the weekend, Treasury Secretary Janet Yellen said the fallout from that banking crisis in March may do some of the Fed's job for them. And this is a point that you made in our last live event together, that the tightening of credit conditions by banks is in itself disinflationary. So explain that for those who may not have been here before.
Yeah, so it's interesting because I feel like there's some of these some of these big bank executives have been trying to like walk that back
Yeah.
over the last few days.
Except for
But
yesterday, I forget which bank it is, but major layoffs in their auto loan department said they wouldn't
yeah,
finance anything over 110% loan to value and no,
yeah,
over
exactly.
50%.
Yeah,
So they're tightening in
yeah.
specific
They're tight in
parts.
specific
Yeah.
areas. Yeah. So
Hmm.
yeah, so it's interesting. I mean, so basically, I mean, like people assume that when the banks go through these crises, that like banks are a little bit more reluctant to like lend out many money, especially to endeavors or companies that they believe to be at higher risk. So
Hmm.
like you said, I think one was like autos, and then another one I think I forgot who mentioned it, but I was reading a press release and they were saying that commercial real estate. So they're tightening back their lending in commercial real estate.
Yeah.
So I think it absolutely has had an impact, though it might not have had it as overarching of an impact as people may have first expected when they saw like Silicon Valley go down, and then it was Signature Bank. So at the time, it was, people were worried about like major bank runs across all sorts of different regional banks, and the implications that may have had would be that these banks that are more for like local communities really like dial back the lending. How does that impact those local communities, like small businesses, et cetera? Now that maybe we're starting to move a bit beyond that, it doesn't mean that we're out of like the woods, right? So now
Hmm.
like that credit tightening is happening in certain pockets, maybe like you said, like autos, commercial real estate. So um what that what that does is just I feels like it like eases off like the gas pedal, or like some of these areas that needed the money are having a harder time getting it. So it might slow things down, but it may not have had like that huge credit crunch that people were maybe like fearing, to be honest, at the beginning of the bank crisis in March. It was just that people thought that everything was going to dry up, and then all of a sudden people couldn't get the money or the loans, and like the spending would dry up, like the investments would dry up. But it does seem like that may not be the case, but it is a bit of like a tightening in certain pockets, like you said.
Yeah. Okay, so I do want to get to our audience questions. Everyone who is joining live, please submit more questions if you have them as we go, and we will answer every single one of them. First, a comment from Derek, your fellow T3 trader. He said, "Nice shirt, Dan." So, compliment
Yeah,
there from
thank you.
Derek. He likes your shirt. Our first question comes from Gillis, and he asked if you use options and scalp trade.
Yeah. So scalp trade, I mean, like, do I scalp options or scalp equities and options? I mean, I can answer both.
Yeah,
So
answer both.
I do focus much more so on options. So
Mm-hmm.
I scalp options, I swing trade options, I also trade events with options. So I
Mm-hmm.
do a little bit of everything. For me, scalping options, it typically revolves a little bit more around like intraday or like news based stuff during the session. So I mean, there's times when I'm literally in like an option trade for seconds. So
Mm-hmm.
if I get into something that moves quickly, I'll sell it. I mean, like, I don't have a defined holding period when it comes to it. Like some contracts are seconds, some are minutes, some are days, some are weeks and months.
Mm-hmm.
So yeah, I definitely do scalp options pretty frequently. It's not every day, but I mean, it also depends on what's going on during that session.
Okay. Our next question comes from Yan France. First, he said, "Good to see you." He said, "We used to trade at the same trading desk
Yeah.
back in
Yeah.
2007." So, a trader you've known from the past is here.
Yeah. What,
He
what's up,
his
Yan?
question his question was, "What do you use most, credit or debit options? Also, what do you look for on a weekly basis, not earnings releases or a news-driven event, regarding choosing your trades or tickers?"
I usually mostly debit,
Okay.
mostly debit based strategies. Credit when I feel like they're appropriate. Um, and as far as like as far as strategies outside of events, I mean, it's a little bit of like it's a little bit of like a blend, say, of maybe momentum and technical. So just momentum in the sense that you want to be involved with the stuff that's moving. So if something's moving, and I'm looking at continuation patterns and focusing on like option setups that I can kind of apply to that, or breakout. It's like the standard technical like setups as well, right? So if I think a stock is about to break out, instead of like purchasing equity in it, I would look at to like buy calls, right? So it's just like looking at like consolidations, resolutions of the consolidation, breakout, breakdown, things like that. Like whereas some people would go with the equity, you can approach it from the same way. It's just buying calls or buying puts and like trading the breakout from like a similar manner.
Okay. We have a few more audience questions. So for everyone watching, again, just submit any more you have. I'm happy to ask Dan questions that I have personally, but I want to make sure we're talking about what you guys want to learn about. So submit those questions in the live chat now. Jose asked a question more focused on T3 trading and your role within T3. He asked if you provide options training or mentorship for new traders who are joining T3 trading.
So we provide T3 does provide different training services.
Mm-hmm.
My mentorship role more revolves around being in the alpha team room.
Mm-hmm.
So in the alpha team room, we interact with a lot of different traders, and some have a ton of experience, some have very little experience. So the mentoring kind of is more. It takes place on a more like daily intraday level, where people can ask questions, whether that's like what I'm looking at trading wise, what am I looking at like option wise, what am I looking at down the road, or just even like mentality, or just like basic option 101. So for me, like that's like done of the mentorship role I'm in at this point. But as far as like training education, T3 does offer those services. So if you want to, you can go check that out.
Mm-hmm. Yeah.
I can plug T3 here.
Yeah, great. Okay, so I'll ask you a question. Our big economic data next week is focused on the housing market, and then on first quarter GDP. We'll get our first estimate of GDP next Thursday, I think. But all the other news is kind of on the housing market. The housing market has been this weird sticky part of the whole inflation picture. Prices are not necessarily going down, they're just kind of not going up anymore. They're just kind of leveled off because demand is still high, but supply is still low because no one wants to sell their house because rates are so high, and no one wants to buy a house because rates are so high. And it's this really messed up picture. And so on the housing market, how do you think that impacts the economy overall, whether we go into a recession, a deeper recession, or a lighter recession, based on what the problems we're seeing in the housing market? They're not going away for the Fed at this point.
Yeah, I mean, it's an interesting question, and I don't know if there's like a correct answer for that.
Mm-hmm.
I mean, for me, it's something that hits hard. It hits close to home, like no pun
Yeah.
intended, because my wife and I have been looking at the housing market, like trying to like find something to buy. And
Mm-hmm.
I mean, you living in California with myself, I mean,
Yeah.
you realize like the state of the housing market out here is absolutely ridiculous.
Yeah. We sold
Um,
and bought last year. It was not a good time to be a buyer. It was a good time to be a seller.
yeah, no, there you
So
go.
we're
Nice,
in the
nice.
whole hope for a refinance next year
Yeah,
situation.
yeah. So it's really it's a tough spot because I think like you said, people are reluctant. People are married to their rates at this point. They're not married to their homes.
Mm-hmm.
And people are very reluctant to give up their like 2 or 3% fixed rate right now. And I mean, I think what the Fed is, I think what the only thing the Fed can really do would be to like keep rates higher for a longer period, where maybe we don't get a immediate correction of real estate, but like over a slightly more extended period,
Mm-hmm.
maybe like those prices plateau, or even start to like come down. Because I mean, life events happen, and like
Right.
people get married, people have a family, people lose their job, or they change careers, and they move. So people, I mean, not everybody has to move, but there are a lot of people that do end up moving. And, even if like the prices don't correct in a dramatic fast fashion, I mean, over like, a couple of years, maybe like the prices just don't go up, right? Or maybe they start to like slowly like pull in a little bit. And I don't know. I mean, outside of creating like a massive recession where everybody loses their jobs and all of a sudden nobody can pay their mortgage. I mean, I don't know what the Fed could do at this point.
Mm-hmm.
Um, and it's just it. And I've read so much about it, and some people are convinced that the housing market is in a bubble and we're due for correction. And there's other people that say like there's still buyers that are looking to get in if the prices did correct. So there's going to be
Right.
like kind of like a perennial bid underneath the housing market. So it's not an easy. I don't know if there's an easy solution to it, and I think it's also like kind of like hyper local as well. I mean,
Yeah.
depending on where you live, it seems like different locations are experiencing different things. I mean, like the Pacific Northwest, San Francisco, some of like the boom towns during the pandemic, Austin or even like Phoenix, they
Mm-hmm.
seem to be going through a more a steeper correction versus like some other areas that didn't see like the same dramatic rise. I was seeing that in Florida. I mean, some prices are up year over year. So
Yeah.
uh, I wish there was an easy solution. I mean, I would love nothing more for like the real estate in Los Angeles to correct 20 or 30%, but
Mm-hmm.
I'm not seeing it. And I don't know for you seeing it. I don't know if you're seeing it either. But
There's a
it's
house for
just,
sale down the street, and it's still higher per square foot than I paid for my house last year. So,
isn't it? Wow.
yeah,
Oh,
yeah.
yeah. Yeah. It's wild. It really is. So, but
Mm-hmm.
yeah, it's something that definitely, hits close to home for me. So I'm always reading about the real estate market. I'm very, very interested in it right now.
Me too. Personally, I'm also very interested in it, always have been. Okay, our Gillis asked, and this goes with what I was going to ask you as well. He asked about your thoughts on a possible recession. And for me to add to that, we're going to get that Q1 GDP number next week. Everyone is expecting growth in this quarter, and then, that negative growth to come later this year. When do you see the US possibly hitting a recession this year? Do you agree with everyone else that it's going to be Q3? That's kind of the
Yeah,
consensus.
it's hard for me to like really like go against consensus just because it seems, it seems like that's the way things are lining up. But I also, I don't know. I mean, it seems like a recession, like there's going to be possible different levels, right? Like it could be
Mm-hmm.
just a very mild. It could be a little bit more moderate. I mean, there's still so many like unknowns and variables that, even if there's like a very high chance of us having a recession later this year, I mean, whether it's like mild or moderate or even like, worse than that, which hopefully it's not,
Uh-huh.
it's so hard to see in the distance like that. I mean, I listen to like different economists and different like market commentators, everybody's kind of saying a little bit of like something different, but I mean, it does seem like we're heading that way. I think people are kind of just disagreeing over like the magnitude of what's coming. And
Yeah.
I mean, I don't think people just, I mean, just a month ago, we had like a banking crisis, and I don't think anybody saw that happening.
Nope.
So it's like things kind of like come out of the blue sometimes and just create, so much more uncertainty that it's hard to like really have like a firm grasp of like what's going to happen 6 months from now, because I mean, we don't even know what's going to happen like 6 weeks or 6 days from now. It's kind of,
Yeah.
at least like that's how I look at it. And that's kind of how I've approached it, where I like to know people's opinions. I like to know what like the smart, like these smart economists and these smart market commentators are saying. But I also take a lot of it with a grain of salt, because if you go back and read what they were saying in 2021 and then 2022, it's like, a lot of people got it wrong. I mean, a lot of the things that happened were hard to predict, and the overall what took place overall was like far off of what they were expecting. And I mean, who's to say like that couldn't potentially happen again this year, where, you know, everybody's thinking this is, you know, such like a certainty, but at the end of the day, I mean, you know, all the variables that we don't know, they could have like a totally different impact on what
Yeah.
the outcome is.
An interesting earnings story for me was United Airlines yesterday after the close. They're expecting to turn a profit next quarter, expecting revenue growth year over year as they enter, that summer season of
Yeah,
travel.
I bet they
With
are. Have you looked at the price of flights recently?
Yeah, yeah. With the
Yeah.
backdrop, though, of everyone expecting us to go into a recession. So if you're expecting
Mm,
recession, you expect consumers to pull back on spending. But then the airlines are saying, well, everyone's going to still travel because the
mm,
world is, reopened.
mhm.
How I don't know, how do those jive with each other?
They don't. They don't.
Yeah.
They don't jive. I mean, at
Yeah.
some point, and I think I think that's one of like the major things too, is that people are looking at. It's like, you know, like discretionary spending, or these, you know, people's like vacation. I mean, at what point do they start to say like, you know, enough is enough? I mean, what, you know, the flight prices have been high, like the hotel rooms
Yeah.
have been high, like these experiences, you know, like going to like concerts, Taylor Swift, like going to like games, right?
Yeah.
I mean, everything is just so much more expensive, but there's been, you know, like there's been demand still,
Mhm.
and I think everybody's kind of wondering the same thing, like when do we get to the point where, you know, like you hit like you hit that level where like it like demand just can't go past like this, like it can't support these prices. And I don't know if it's going to cause a recession for like the airlines to, you know, to like for like the pricing to come down, or for like the
Mhm.
demand for to air travel to come down. But I mean, it seems like I think that's one of the things that surprised people up until this point, is just like how there's still been like such incredible demand for travel, and for a lot of like these experiences. And I mean, I suppose as long as people you know, prioritize it over certain things, right? I mean, I don't know what they're giving up to be able to afford these experiences, unless they're, you know, just, you know, they have like a lot of discretionary income.
Yeah.
I mean, it just seems like that's like the path we're
Or
on.
burning through that, high
Yeah, that pandemic
savings.
savings. Yeah,
Mhm. Yeah.
yeah, I don't, yeah. It's interesting. I mean, I was just looking at air travel, and I mean, it seems like flights that were maybe like $200 like a year or two ago are now like 400 to 500. and
Yep.
and
Yeah.
And, you know, even then, I mean, you know, flights are full. I mean, maybe like the
Yes.
capacity is down, but I mean, it's like flights are full, like, and people are paying. So,
Yeah.
I mean, I guess the airlines have no incentive to lower prices if
No.
people are paying.
Like, they're still technically paying higher fuel prices than they were at this time last year, but they're paying way lower fuel prices than they were at, like, that peak
Mm,
level, but they still, as a customer, say, "Oh, fuel prices are high."
yeah.
Another story that kind of was quiet today was the release of the Fed's latest Beige Book. The Beige Book is, a survey of all the Fed districts and how the economy is faring within those districts. The Beige Book said they did see, or shows they did see, a decline in loans following the Silicon Valley Bank collapse, and that is adding to stress in the economy. Inflation is
Mm.
slowing, not as much as they want. Hiring, though, is starting to slow, which is good for the inflation picture, not good for the health of the economy. We've been in this circle of bad news is good news for the market until I feel like the last jobs report. That shift kind of happened in the last jobs report, where maybe bad news is bad news again because
Mm.
traders are looking at the possibility of a recession in the third
Mhm.
quarter. As those recession fears ramp up, how do you expect the market reaction, the equity market reaction, to unfold?
You know, it's tough. I
Mm-hmm.
because I think one of like the main drivers. So you know, at the risk of at the risk of like upsetting like all these other, you know, people that trade all these like thousands of other stocks. I mean, it seems like it seems like right now there's like 10 stocks that really just matter more than everything else combined. And you know, and those are like obviously like the big tech names and a couple one-off names like elsewhere. And it seems as though people have come to the conclusion that these names are either recession proof or they're defensive.
Mm-hmm.
And they feel like they can weather whatever storm is coming better than others.
Mm-hmm.
And what's interesting about that is that they make up so much of the weighting of several of like the indices that
Right.
it, you know, like people might start thinking, okay, like bad news is bad, and you know the recession fears might be heightening, but somehow, you know, like those handful or two handfuls of stocks that carry all of like the cloud for the indices, they keep getting like these inflows. So it's like to me it's like something like in like the sentiment has to like change on around those names for like people's fears around a recession to really escalate. Because if people say, oh, you know, so it's recession, fine, like I'll just you know buy Apple, they have so much cash on the balance sheet, or you know like buy Amazon, people are still going to like do like their spending, or buy Meta, I mean, like, you know, people are still on Instagram and people still market with them, right? So
Mm-hmm.
it just it to me it's like, you know, recession fears on one hand, but then people's sentiment around these other stocks on the other, and
Mm-hmm.
it's like it's kind of like a battle between the two where, you know, people's opinions of those stocks need to change for like bad news to really have like that bad news impact. Because right now it just seems like people feel like those are you know safety in like in this storm right now, and they're keeping the indices afloat, which kind of gives people like this sense that, you know, maybe the recession's not going to be so bad, or maybe things aren't as bad as they are. But I mean, it's really just like these handful of stocks, or two handfuls of stocks, which are given like this false sense of security to
Yeah.
me. Like that's kind of my opinion on it.
Okay, we have another audience question, and this is going to be my last call for questions from the audience. So if you have any questions, submit them and we will answer them as we wrap up here. Joseph asked, in your year-to-date trading, are you in the green or red so far this year? And what are your most common best trades?
Okay, so I don't ever talk numbers. So I
Okay.
talk trades. Like that's how it's always. So people that are on a VTF know that.
Yep.
So year to date trades, um, I'd say, I mean, one of like the best ones would be, just off the top of my head, VKTX.
Mm-hmm.
So it's a little bio, and that was one of the ones that we had been talking about on the VTF, or the Alpha Team room, excuse me, for an extended period. And it's just, you know, it was like a data-driven biotech play, and what we were looking for was just, you know, phase one proof of concept data came out. Stock had you know, it was great data. Stock had a phenomenal move, but you know, like that was one of those names to me that I had been looking for. Had a little bit more size in it than I do like a normal trading stock. Ended up working out, and I mean it's continuing to go. Unfortunately, I'm not in it, but you know it's one of those stocks where it's, you know, had like a game plan, had a, you know, a thesis on it, ended up working out. Did have a little bit more size on it too, which helped. And you know, for me, that was one of the names that like moved the needle a bit more in 2023.
Okay. So just to wrap things up here, you at this point in your career, as you've talked about, are an options specialist. That's where you focus most of your trading. How did you come to focus on options? Why did you pick this as your favorite way to trade?
Um, you know, it kind of moved that direction, because I found earlier, in my career that I really liked, I really liked trading events.
Mm-hmm.
And one of like the problems with that just being like an equities focused trader is just that, um, you know, there's too much risk associated with that. And you know, I feel like I would miss like some of those larger overnight gaps. And to me, it was frustrating. And, you know, I felt like getting into options, you know, allowed me to participate on those, you know, more along the lines of what I wanted to do.
Mm-hmm.
Also, when I first started trading, I was exclusively like equities focused, and my style was always very like short term, like scalp oriented. So I would hold positions like very either like very quickly, so like several seconds, minutes, so very like short term, like just in and out, in and out, in and out style. And then what happened was, like, I'd look back over like like the day or like a week, and I'd say, oh, I was so like hyper focused on like these like micro moves that I missed maybe larger macro moves. So what I ended up doing was like kind of like marrying the strategy where I'd still do like the hyper scalping, but then I'd also
Hmm.
have some option positions which allowed me to like swing and maybe like capitalize on like those longer, larger moves.
Okay. So for everyone who has joined us live, thanks so much for joining this edition of Conversations with a Pro Trader. What a great discussion, Dan. I learned a lot and you answered a lot of my questions, so that was great for me. And for everyone who watched, I hope you enjoyed. I will be back next week with T3's senior trader, Derek Olden-Smith. He is the leader of the ProDesk virtual trading floor. And again, Dan is a co-moderator in the Alpha Team virtual trading floor with T3 Live. So again, thanks, Dan, so much for joining me today. For everyone who is still here, I am, one second, putting a link in the chat for our next live event. Again, that will be next week at 5 p.m. Eastern with Derek Olden-Smith. So hope to see you all there. And Dan will be back in about a month in mid-May. So we'll check in with you again then,
Sounds
Dan.
great.
Okay, thank you.
Thanks so much. Thanks for having me.